Morning, everyone. Uh, Welcome to our webinar, Learn the Secrets of Writing Garage Insurance. My name is Anae Agostini. I'm CEO of CID Insurance Programs. Hope you're all doing well today. I want to introduce our garage underwriter, Teresa Cochran. She, along with myself, are going to be instructing the webinar today. So you'll get some really great information from Teresa. Say hi, Teresa.
Welcome, everybody. Thanks for taking time out of your day to join us.
Great. And then last but not least, Jacob Cole is our marketing specialist, and he runs everything behind the scenes and makes sure that you get everything that you need after the webinar is finished. So let's get started. Okay, let's start with our objectives. So garage is an interesting beast, and everyone is, really programmed to write BOPs and, write for all types of, more homogeneous type classes of business that fit perfectly into a BOP. But garage is a different beast. It's got different parts, different types of coverages and different exposures that have to be carefully insured. So one of the things that's going to be a great guide for you is Teresa's going to talk about how to complete the garage application and how to use it as a guide to figure out what coverages any type of garage exposure needs. And so ultimately we're going to identify coverages unique to the garage form. And we want to be able to identify the coverage needed for each garage risk, which will change. And by the way, there's lots of different types of garage risks. It is not limited to just auto repair and auto sales. So Teresa's going to talk a bit about that as well. Webinar logistics. So this is the easy part, but because there's so many people on listening, participating, we can't have everybody speaking at once. So everyone's muted. You'll be able to hear but not speak. But questions are really important to us because we want to make sure that you're understanding what we're sharing with you, because it's valuable information, and we want to make sure that we're getting your questions answered. So at any time during the webinar, feel free to use our chat room and just type a question in, and we'll stop what we're doing and we'll answer it as we go. So let's get started. All right, understanding the auto exposure. We're really going to be talking about the different exposures that are involving autos. So it's the storage of autos. We're going to be looking at gross receipts related to other installed product sales. We're also going to be talking about, well, what about the delivery of autos that you don't own? And is there a towing for higher exposure? So Teresa's going to dig down into that, and we're going to use the application as the guide as we go along. So Teresa, I'll let you take it from here.
All right. So some of these questions definitely get overlooked on the application, and so that's why we're kind of highlighting certain ones. I definitely want all the questions to be answered on the app, but please note that these ones highlighted get skipped over, and there is a lot of underwriting that goes into some of these questions. So anyhow, theft barriers at each location for autos you own and you don't own. Autos you own are going to be either scheduled autos or dealership operations. A lot of people get confused with these questions. The autos you don't own are going to be for your repair shops. So theft barriers would be, are they kept inside the building? Is it a fenced-in location? Or is it just an open lot? So those are the answers I'm looking for there. Gross receipts. That often gets overlooked, and especially the uninstalled product sales, which would be you own a repair shop, maybe have some accessories that you're selling inside. I need a rate for that. It's not going to be just lumped in to the auto repair operations. So if you can remember to split out those sales, that would be really helpful. Let's see what else we got here. The pickup and delivery exposure. definitely a big one that gets overlooked, not asked. Please ask your client, do they have this exposure? Because that's um, a huge driving exposure for the carrier to take on. So we're going to want to get some MVRs on the people that are driving and do tow for hire. Tow for hire is when the client is fielding phone calls from people that need to get their car picked up and taken wherever they want it driven to. If the business owner is picking up vehicles and taking it back to the repair shop, we actually don't consider that tow for hire because they're picking up vehicles that they're going to be repairing. They're not picking up vehicles and just taking them to somebody else's repair shop, taking it back to the residence, things like that. All right, next slide, Danae.
So just a quick question.
Sure.
The application that we're looking at here, Teresa, is this a general application that would be used for more than one type of garage risk?
Absolutely. So this is a generic garage application. It is geared for garage keepers, so for your auto repair shop, and also for your auto dealership. So some of the questions are not applicable to each risk. So you just have to, read through it, skip over the lines that do not apply to your specific client.
Got it. Great. Okay, so we're going to look at the garage exposure, which is we were talking about autos before. You have to evaluate their auto exposure. Now we're going to look at the garage, the premise, the things that are going on at this garage. A couple of them are going to relate to dealer plates. Do they? And it's probably something that most of you don't even think about. And then who works for the business, and are they a furnished driver? Those become really important issues that Teresa's going to talk about. And then what types of autos are being sold or repaired? That becomes an exposure concern as well. So Teresa's going to go ahead and go through another portion of the application.
All right, so let's see here. Dealer plates. Those are the plates when you see cars driving and it has the DLR on it. Those are dealer plates. We need to know how many of those your dealership has, because that is going to be a rating factor if they want to get the uninsured motorist coverage. So the number of dealer plates is definitely important. We can worry about getting plate numbers, things like that later on when they want to bind the coverage, but definitely ask the question, how many dealer plates do you have? That's the only thing we have highlighted on this on this section of the application, but we have a couple more questions.
So as we go along, I want to let everybody know that Teresa works with all of our brokers on garage risks, and so she's very knowledgeable of the sort of the trips and falls that people fall into with the application, and so we've highlighted those questions. And those are the ones she's reviewing. You can view the others, and please, if you have a question on any of the other questions you see on the app that you don't understand, you've struggled with in the past, type a question in, and we'll go back to that slide, or we'll answer your question as we go.
Yeah, feel free to chime in. I don't want to go question by question on the garage app. I can do that with you over the phone personally, but I don't want to take up everyone's time with the easier questions. All right, this is an extremely important one to me. This is how I rate the garage liability. If I don't have this information, I'm not going to be able to help you, and we're just going to be going back and forth via email or phone trying to get this information. I need a list of the owners, the employees, and the drivers. Not only the drivers, I need everybody from clerical workers all the way up to the ownership. So please, please, please. I don't need everyone's driver's license number, but I do need at least their names, their job duties, whether they're full-time or part-time, and are they furnished in auto, and which location are they working at if there's multiple locations. If anyone's not familiar with what a furnished driver is, it's someone that is using an auto, let's say typically it's going to be a dealership. They're using a vehicle off of the lot for personal use. It's not, oh, I'm going to go, we bought a vehicle at this auction, I'm going to go pick it up and drive it back. That's business use. I'm talking they're picking up their kids from school, they're taking the vehicle home, you know, personal use. That is what a furnished driver is. So it's very important that I know who the furnished drivers are so that we can name them on the policy and also rate for them accordingly.
Good information.
All right, and there could be people that are not working for the business that are driving vehicles off the lot, or if it's a repair shop that has scheduled autos that are named under the repair shop. You know, maybe a spouse is a typical situation I see. Maybe a spouse is driving a vehicle. I need their information as well so that we can rate for it. And then question 21 here, that's a big one. What kind of vehicles are they repairing? What type of vehicles are they selling? They could be doing a mixture of both, which is fine. But please let me know so I can get the right class code for you. The most typical one we see is the private passenger cars, SUVs, pickup trucks. That's going to be your standard repair and dealership. But, you know, they could be doing contractors' equipment. We do a lot of heavy truck, motorcycles, buses. So please take your time going over this with your client so that we can rate this properly for you.
Question for you, Teresa.
Sure.
Is this would, if they were doing, say, motorcycles or, you know, trucks, tractors, and, you know, like what we call large truck repair, would you need a supplemental with if would that trigger a supplemental?
Some of these classes
application
do require a supplemental. The heavy truck, the contractor's equipment, we're going to need a supplemental. But 9 times out of 10, I'm going to be able to quote subject to receiving that supplemental application.
Okay, great, wonderful. Okay, and so now we're gonna separate it out, and we are going to talk specifically about auto dealers. And everyone, I mean, these small independent auto dealers are everywhere, and so there's a lot of opportunity to sell auto dealers. So we're going to Teresa's going to talk about questions about the purchase of vehicles. The point of purchase distance matters. And she's going to explain a little bit more what that means. And then how many vehicles are sold annually. So those are all, some of those could be rating factors, but they're definitely exposure factors. So I'll let Teresa tell you all about it.
Yeah, and it's not only that, it's also which carrier can I go to. That's going to help me, you know, pinpoint where I can quote the risk. So the drive away miles, again, going back to the dealership, they're going to an auction that could be more than 300 miles away. And I need to know how far they're going because they're only covered up to 300 miles with my carrier. So if they're going to be going 301 miles plus, that's fine. I just need to know how far they're going and how often they're doing this so that I can rate for it accordingly. And if there's an accident, that's, you know, we want to make sure we have the policy ready to go, covering them wherever they're headed. And how many vehicles do they sell per year? You know, just try to give the best estimate you can. Break it down by month. You know, ask your client, how many do you sell per month? How many do you sell per week? Just so you can get a good guesstimate because that is going to affect the carriers I can go to, as well as, you know, the rating factor. And right underneath, it's asking for a breakdown of retail percentage, wholesale percentage, and consignment. I definitely need to know this information because, again, it is going to affect the class code used and and some additional information I may need subject to binding. Wholesale. A wholesale auto dealer is often misconstrued. A wholesale auto dealer is somebody that is not selling to the general public. They're selling to other dealerships. It's not, oh well, I sell at wholesale prices. That doesn't make you a wholesale auto dealer. If you're selling at wholesale prices and you're selling it to the public, you're going to go into the retail category. So please, make the client understand that so that the application comes in correct to me. There is a little bit of a surcharge for a wholesale auto dealer, and I don't want to be adding on that surcharge if it's not needed.
What about consignment? Do you see that often, or how does that enter?
I see it maybe about 10% of the time, so it's not out there a lot, but I really just need a copy of their agreement, making sure that the people that are consigning the vehicle actually have full coverage on that auto, because the business owner doesn't own that auto, so we don't want to take on additional responsibility for it.
That makes sense. Okay, so now we just talked about the auto dealer, but now we're going to talk about the auto service exposure. So that's your repair shops, and we want to Teresa's going to go into a little more explanation of how you can better understand the service exposure. Some of the things that you don't think about. Do they have a paint shop? So you have to really look at that, because that's definitely a risk exposure that needs to be identified. And then, are there structural frame modification services? Because that gets into a riskier area that we need to know what they're doing. So I'll let Teresa tell you all about it.
All right, so this is kind of a big grid. The repair shops do a lot of different things, and I don't want under the other category to say repair operations. I really need a breakdown of what they're doing so that, again, I can classify them correctly and ask the additional questions that may be needed for that specific type of business. So please provide a percentage breakdown of what they're doing. And in the other category, I do see some random things in there, but you can also feel free to reach out to me if you're not sure exactly where they fit in these different categories.
Well, let me ask you, Teresa.
Yeah.
So I would probably struggle with the same situation. When general repair work, I'm looking at all those categories going, I can understand why someone would put it in other. But a lot of it would probably fall under tune-up, oil and lube, potentially. If you're just a standard repair shop.
In the repair shop, you're typically on the left side, and it's maybe the top 5 or 6 is where I see most of the work being done. Your collision shops are going to be more on the bottom part of that left column, so the bodywork, the painting, possibly the framework. The items towards the right side don't see too much of, so definitely the left side is the heavy hitter.
Okay, but the top 5 would be a typical repair shop, and then anything that is more extensive, like a body shop, that kind of thing, you're going to be the bottom portion of the left.
Exactly. The more specialized ones are going to be towards the bottom of the left or on the right side.
Okay, that's good. That's a great guide to follow.
All right. The spray booth. Spray booths can cause fire. So that's why the carrier has all these different questions regarding the spray booth. UL approved, want to make sure that there's a ventilation system in there so, all that spray has somewhere to go, and the fire resistant cabinets. We see that a lot on loss control recommendations. So these items do need to be asked when you're meeting with your client. And the frame cutting and stretching. you're altering the structure of that vehicle when you're cutting the frame and or stretching it. So if they are cutting it, probably not going to be a market for that, because if you cut it and it's not welded back, they're going to be driving down the road and just the vehicle is going to collapse. So the frame cutting, probably going to stay away from. The frame stretching, definitely something we could look at. The carrier just wants to make sure that they have the make and model of the machine being used. And that often gets overlooked, and we have to go back to you for it. So just something to keep in mind when you're meeting with your client. Insurance history is definitely something we like to look at. Have they been in business with no prior, which is fine, but there is going to be a little bit of a surcharge there. If they have loss history and you don't know the policy premium or the effective dates, that's fine. But if you can at least put the carrier information down, that way I know they've had prior coverage and for possibly how many years. Because every year that they've had coverage, it looks better and better with my carrier. I could possibly get some credits added on there for you. I just want to be as competitive as I can. The more information I have, the better. If you leave it blank, I'm automatically gonna add on a surcharge for either new in business or no prior coverage. So the more info I can get on this question would be fabulous, because it 8 times out of 10 gets overlooked, and you get that surcharge for no reason.
Right. So what you're saying is you can quote subject to on the loss history. However, your rates, your premium will not be as competitive as if they gave you at least some general information that you can hang your hat on and apply some credits for.
Absolutely. Just let me know. Have they had coverage, and for how many years? That's really what I'm looking for. And then subject to, I'll get the loss history. As long as they've been clean, I don't need loss history up front, but I'll need it at binding just to prove to my carrier that they've had this coverage, why I'm adding on a credit, and things like that.
Excellent. Okay, so garage coverage options. So this is where we get into those different coverages that, if you're not writing a lot of garage, this can get a little confusing, or if you are writing garage, it still can be confusing because there's moving parts to the garage policy. And Teresa's going to go over the garage liability, garage keepers coverage, dealer's physical damage coverage, and there are additional coverages that you need to take a look at with your insured as well. So take it away, Teresa.
I always say garage is its own language. It's very different than your typical BOP or model line liability or property policies. So a lot of people don't understand when they see garage liability. Garage liability is general liability, but it also adds on garage operations. So that's why they call it garage liability. So you're getting your trip and fall, you're getting the work performed liability for any resulting damage of fault to repair. And then you're also getting auto liability for when the mechanics are test driving a vehicle or you're driving back that vehicle from an auction that may be for your dealership. So that's your garage liability. There's med pay, your uninsured motorist, and then it gets into the garage keeper stuff. I want to touch back on med pay. There's 2 selections for medical payments. You can have medical payments just for your location, so that would be your garage operation, and you can also have it for autos. So if there's a driving exposure, you're going to want to add on, you're going to want to get both. You're going to want to get it for your garage operation, for your autos. If you really don't have any type of driving exposure, you might as well save them some money and just get it for the garage operations. All right, now we can go back to the garage keepers. So this is going to be for your auto repair shops or even your dealerships that are test driving customer vehicles that maybe they're going to buy, do like a trade-in. So the number of autos, the maximum number of autos that they're going to be holding, and the limit. That's the key for the garage keepers. I need to know the limit, or else I'm not going to be able to quote it for you. And if the numbers don't make sense, if they're saying they have, 5 autos on hand, and the value of those autos is about $5,000, but they're asking for $100,000 in garage keepers coverage, something's off. So look over the numbers, make sure it makes sense, and then down below is the legal liability and direct primary. Those are big differences in those two coverages. Legal liability is only going to apply when the insured is negligent for a cause of loss. So let's say your client is working on the client's working on a vehicle, and they, for some reason, they press the gas pedal and it goes into the wall. They're legally liability for that accident. There's going to be coverage. But let's say business is closed for the day, and someone breaks in, vandalizes the vehicles, and they only have legal liability coverage. Well, there's really not going to be coverage there because our client was not legally liable for that vandalism. They didn't cause that vandalism. So you always want to try to get direct primary, because that's gonna have more broad coverage, and it applies regardless of negligence. So anything that happens to that vehicle while it's in the business owner's care, custody, and control, there's going to be coverage. So try to get that direct primary if you can. And then it goes into deductibles, causes of loss, specified causes of loss. Again, is not going to have as many perils covered as the comprehensive with collision. That's kind of similar to your personal lines auto policies. And the in-transit limit on hook coverage, that's gonna apply when they're doing any type of towing. I just need to know the per auto limit and how many vehicles are being towed at one time.
Got it. A quick question for you, Teresa.
Sure. Yeah.
On the average value of any one auto, is that resale or is that new?
It is going to be resale, so it's going to be the actual cash value, the ACV.
Okay, got it. I just wanted to, because that sometimes people get confused by that. Okay. Anything else on this page?
No, but please chime in with your questions if you have any. All right, now we're going to go into the dealer's physical damage section, which is for your dealership. Dealer's physical damage is only for vehicles that you own. And it's going to be the same type of grid as you saw for the garage keepers. Average number of autos that are kept on the lot, maximum number of autos kept on the lot, and then the limits associated with that. There's the same causes of loss, specified, comprehensive. I've never seen anyone pick just fire and theft with collision. The first two are the most common. Comprehensive with collision is definitely going to be the one you want. It's more comprehensive coverage, and there is no underwriting basis of which one that they qualify for. So I recommend to always pick the comprehensive with collision. Then we go into deductibles, and then you'll see where it says type, new or used. The carrier just wants to know, are they selling new vehicles or used vehicles? And there's typically a loss payee. If you have a large dealership, you're going to have maybe next year there's going to be someone that's helping you pay for all the autos on your lot, and so you're going to want to make sure to add them as the loss payee, and there's no additional charge for that. And then on the bottom there is that drive away miles again that we spoke about earlier. Let me know, how far they're going, 500 miles, 1,000 miles, or if it's more than 1,000, then we can get the unlimited for them. And the last section here, these are like the a la carte type of additional coverages that can be offered, and this is going to be a mix. So it's going to be a mix for the auto repair shop and for the dealerships. The false pretense coverage, definitely something to ask your business owner about. This only applies to dealerships, and the coverage is if you falsely sell a vehicle to somebody, maybe they tricked you. It's trickery. It's a trickery coverage. They gave you a bad check, bad money order, and you handed over the keys thinking that the money's going to go through, and it didn't, and you're out of luck. Your money order was fraudulent. I've actually seen a claim come in for something like that. It's a very inexpensive coverage to add on, and it is it's kind of an important one for dealerships to have, because they can be out $10,000 when it may have only costed them $50 to $100 to add on to their policy. A big one to get is the damage to rent a premise. Back to your fire legal liability, you can lump it in with personal and advertising injury, which would be the broadened coverage. Another big one that a lot of dealerships would like to add on is the auto dealer's E&O. It covers them for truth in lending, title, and the federal odometer E&O coverage. If property coverage is wanted on a garage policy, we can definitely do that. We'd have seen it in Accord 140. It's not included on this garage app, so we do need that Accord 140 included with the submission. If there's any questions on this page, please use your chat box and let me know.
So thank you, Teresa. What's our takeaway today? You really need to understand what kind of garage exposure you are insuring, because that's going to determine what coverages they need, right? Which is the second bullet point, and how much is needed to insure properly. The last takeaway is I use the application as a tool to gather the right information. It really is a guide, and Teresa's always available. For many of you work with Teresa already. She's a great underwriter, and she'll take the time with you to make sure that you understand what what you're doing with that application, and so that you can gather the right information. Thank you for joining us today. That ends our webinar, and we're ready. Teresa's ready to take on any of your garage submissions. So if you have any questions, please contact Teresa. You can call her, you can email her, and she'll be available to assist you. And we look forward to doing business with you. Also, we will be sending out a copy of this webinar, and we will post it at on our website as well, so that you could go there. We'll make sure that we get a garage application out to you, along with that link to watch this webinar again. And then please join us for any other webinars. Check to see what webinars we've got coming up in the near future. We look forward to doing business with you, those of you that have not done business with us, and I thank you. Those of you that have, we thank you for your business and look forward to doing more. Have a great day, everyone. Oops, we have a question. Sorry. Don't get off yet. Teresa, you want to answer it?
Oh, sure. The BIE, that is business income with extra expense. So just your typical business income coverage with extra expense.
Right, and that would be important if they had a covered loss and it shut down their operations. It would be a way to keep income, some form of income coming into the company via the insurance coverage. Correct?
Exactly. Correct. So make sure to include an Accord 140 if they want to add on some property coverages.
And that is that what you would do? You need the 140 to get the B the business income?
Yes, and they would have to add, some business, personal, and property as well. I can't just offer business income. So
Okay,
lump
got
it
it.
together with DPP. Right.
Perfect. Perfect. Again, thank you all, and look forward to doing more business with you. Have a great day.